Dear entrepreneurs, technologists, investors, ladies and gentlemen, we welcome you from Switzerland to the Swiss satellite event of the World Fintech Festival 2020. Us, that is Switzerland Global Enterprise, Switzerland official organization for export and investment promotion, and the State Secretariat for International Finance. Switzerland has been part of the Singapore Fintech Festival since 2017. Last year, we sent the largest delegation and set up the biggest country pavilion. This year, we are presenting some of the best of our technology in a virtual exhibition. As a strong financial center and technology hub, Switzerland features one of the world-leading fintech ecosystems. Rankings put Switzerland in the top 5 globally. Today, as part of the Economic Summit and on December 9, we want to highlight how we go about creating innovation sustainably and share some of our insights with the world on how to grow a unique place where technology in general can flourish. How does this place look like? On August 12th this year, I was climbing up to one of the globally most known and Switzerland's most attractive mountain, the Matterhorn in Zermatt. That day, a dream came true which accompanied me since I was a little girl. I was overwhelmed when I reached the peak around 8 a.m. in the morning. Embracing the gorgeous view from the top and taking pictures, my mountain guide explained to me that Zermatt already has 5G mobile internet coverage and hence, even on 4,478 meters, the technology was readily available. The Matterhorn was part of a 5G long-distance test. By the way, I learned that in addition to his occupation as a mountain and ski guide, he runs his own startups, developing apps for mountaineering and tourism. Another example. The ski resort Flimslags in the Grisons offers flexible co-working spaces on 2,250 meters above sea level for techies to reach the peak of inspiration and combine that with an unmatched sports adventure. Anywhere in our country, you can find dedicated people working on innovation and state-of-the-art infrastructure. This is why Switzerland has been regularly producing world premiere in the fintech arena, for example, related to blockchain technology. In 2014, Ethereum and its cryptocurrency token, Ether, were founded in Zug. Today, it is the most common cryptocurrency and blockchain technology after Bitcoin. In 2016, Zug became the first city in the world to accept Bitcoin payments for tax purposes. In 2018, the fintech company 21 Shares, formerly known as Immune, launched the world's first crypto exchange traded products on the Swiss Stock Exchange. Since 2019, Switzerland has 2 regulated crypto banks. Bitcoin pioneers such as Xapo or Bread Wallet have moved their headquarters to Switzerland. The blockchain ecosystem prospered throughout the whole country, and today there are over 840 blockchain and crypto companies. The industry employs by now more than 4,400 people and keeps on growing. Switzerland breathes and lives the fintech reality. That includes especially our business-minded public authorities. We listen to the needs of our domestic and foreign entrepreneurs with their disruptive ideas. We want our regulation to enable innovation. For example, with the sandbox regime for fintech, implemented already in 2017. We offer a stable, secure, and trustworthy environment with high ethical standards, being a traditionally strong financial center. And there are many other factors contributing to Switzerland's unique fintech ecosystem. I am now very happy to open the stage for our Federal Councillor and Minister of Finance, Ueli Maurer, who will be followed by a panel discussion with the CEOs of our two global banks, UBS and Credit Suisse, and the President of the Swiss Bankers Association. They will share with you Switzerland's success factors to become one of the leading places for fintech in the world. I wish you now all a rewarding conference with many insights and lots of inspirations. Mr. Federal Councillor, dear Ueli, the floor is yours.
Ladies and gentlemen, good morning from Zurich. I'm happy to open the Zurich satellite event of the Singapore Fintech Festival. Everyone speaks of fintech. Technology takes over the world, also in finance. Therefore, financial institutions that take technology on board, such as fintechs, are the future of finance. Everybody knows the Swiss Financial Center for its long-standing traditions and values. But Switzerland has also been a leader in innovation. We rank number 1 in the Global Innovation Index since many years. Only in Switzerland, we have a financial center that combines traditional values like trust, security, stability, and excellence with innovative ideas. And we have a very close network between the private sector, the government, the supervisory authority, and the National Bank. This close network and the high degree of know-how leads to innovative products. For example, the first fintech bank was launched in Switzerland. Also, with the BIS Innovation Hub Center in Switzerland, we create world-class research on DLT infrastructure. I congratulate the Swiss National Bank, SIX, and the Bank for International Settlements on the successful experiment Project Helvetia. Project Helvetia was the first central bank digital currency experiment by the Swiss National Bank, and it complements the planned launch of the Swiss Digital Stock Exchange. It is a great example of how open collaboration can foster the common understanding of the impact of digital innovation on the future of the financial system. Digitalization requires innovation-friendly framework conditions, and what businesses need is legal clarity. As a member of the Swiss government, I'm looking to provide a legal framework that gives clear guidelines to innovative companies. Financial market regulation should not create barriers to market entry for innovative businesses. Switzerland has already done a lot to remove such barriers. We want to help new players establish themselves in the traditional finance space, and we want to promote the fintech and blockchain ecosystem in Switzerland. This is an ongoing task that needs close interaction and collaboration between the government and the private sector. But I can assure you, Switzerland is a world leader in this. As you can see, we work hard to be one of the best financial centers in the world. Today, we are presenting a brand new website called finance.swiss. This new website brings you first-hand information about the Swiss Financial Center. Finance.swiss is a cooperation between the government and the private financial sector. Our goal is to offer a single point of entry for everyone who has a question about the Swiss Financial Center. I invite you all to visit the website and find out more about our excellent and innovative financial center. I'm proud to be part of this public-private partnership. And so is my colleague, the Minister for Foreign Affairs. Let's hear what the Minister and the financial industry leaders have to say about finance.swiss.
Our world-class financial center is an important part of the Swiss economy. It is a strong pillar of Swiss prosperity and an important element of our image abroad. The financial system plays an important role in addressing the global challenges facing the world. We want to contribute to the solution of these challenges and to our common prosperity.
I'm really proud that our banks stand for top quality services and top expertise. And of course, they are rock solid. Together with the federal government, we are standing united for a strong Swiss financial center.
Switzerland not only has strong banks and insurance companies, but also world-class asset managers. Building on their extensive experience in managing pension assets, they have become a strong pillar in the globally renowned Swiss financial center.
Stable and secure infrastructures from SIX are a critical success factor to the success of the Swiss finance industry. We are proud and delighted to support finance.swiss.
Political stability, legal certainty, solid regulation, entrepreneurial spirit, and a talented, diverse workforce contribute to Switzerland's position as one of the world's leading insurance hubs.
Did you know that Switzerland is one of the three most important places and markets for reinsurance in the world? That is why we have access to all the good talent here in Switzerland.
The Swiss government, together with its Swiss insurers, banks, asset managers, infrastructure providers, and of course the innovators in the fintech area, share the ambition for Switzerland to be a globally leading financial center. On our new platform, we provide in-depth information and reliable details about the Swiss financial services.
Thank you very much, Federal Councillor Uli Maurer. And because you're known for loving bells, I suggest that you launch finance.swiss with a nice ring. Uli Maurer, bitte. And with this sound, finance.swiss is officially launched. Go and check it out after this event, of course. Herzlichen Dank, Bundesrat Uli Maurer. So finance.swiss is not just communication, but it's a whole industry that we're trying to cover. Therefore, I'd like to introduce you to our high-level panel now to talk about the strengths of the Swiss Financial Center and the future of banking. And my panelists are Daniela Stoffel, State Secretary for International Finance, and then we have Herbert Scheid, President of the Swiss Bankers Association, Ralph Hammers, Group CEO of UBS, and joining us remotely from Singapore is Thomas Gottstein, Group CEO of Credit Suisse. Welcome to this panel. So we just launched this new platform, finance.swiss, and as I understand, it's quite a novelty. It's the first time that the public and private sector are working together to promote the Swiss Financial Center. So it's quite a milestone, and I wonder, State Secretary Daniela Stoffel, what does it mean for you as a representative of the state?
First of all, I have to say we are immensely pleased with the result. It's been a while in the coming, but for Switzerland as a globally active financial center, it is an absolute necessity to be able to provide information to our global audience. And of course, we are also very happy that finally we have a tool to even more showcase the Swiss excellence in this field and to sort of distinguish us from the competition.
Okay, then Herbert Scheid, to you, the Swiss Bankers Association is supporting this platform. Why is this important to you?
Well, I mean, quite clearly, as State Secretary Stoffel has put it, it's the place where you can get easily bundled all the information of the Swiss Financial Center, bundled together, easily digitally available. So as a small country, we have to explain what we do. We cannot assume that everybody in the world knows about us. So what we have to do is we have to show our strengths, we have to show our characteristics, and we have to underline what distinguishes us. And there's a lot that distinguishes us. For example, we stand for real stability and reliability. And that reliability is built on a very reliable legal system. We have political stability, which is much needed in a world riddled by tensions in the geopolitical sphere. We have excellent banks, which offer first-class products. We have a strong currency. So we have this rare combination of unique factors which makes Switzerland a fantastic banking place. So that is what comes through this platform, finance.swiss.
Okay. Federal Councillor Uli Maurer, in his keynote speech before, mentioned that Switzerland is working hard to keep its position as one of the leading financial centers in the world, and you mentioned also the factors why we are one of the leading ones. But if we look into the future, which areas do you want to invest in? Where do you see the future going? Maybe again, Herbert Scheid.
Well, I think, what we know is required is that we listen to our clients, and that is to our clients globally. We have to follow our clients in their demands, and their demands are these days, they are driven by what they experience from the large digital companies. So they want convenience, they want to have first quality. And we as global institutions, and that's characterizes Swiss banks. We always have been thinking in a number of currencies. We always have been thinking internationally because our home market is relatively small. So we have to go abroad. We have to understand what our clients need. We have to provide the convenience to offer what they need. And we can do that with first-class and innovative products. We are in Switzerland, we have among the best universities of the world. They help us to be innovative. And that is precisely what we feel internationally is required.
Okay, thank you very much. Then Ralph Hammers, you arrived to Switzerland very recently. Welcome, by the way. And based on your experience before you were at the Dutch bank ING Group, I'd like for you to give us a bit of an international perspective when it comes to fintech. For instance, Herbert Scheid mentioned that we need to go abroad, but what are the conditions, what are the trends abroad?
Well, I think fintech is nothing new, right? So you saw the fintechs coming up about 10 years ago on the back of the success of digital, on the back of the adaptation of mobile. And then digital became something that the consumer could really kind of benefit from. I think what you have seen since, and as a trend, you saw neobanks coming up, like banks completely come from scratch, clearly not having the legacy that most of the old banks have, like ours, so they could move faster. Having said that, you also see that they haven't really come to fruition from a business model perspective yet. So I do think that they can be successful, but the business model, will it be sustainable over a longer time? The freemium kind of approach in order to get as many clients as soon as possible to build scale. How will you make your money? So that's one trend. The other trend is pretty relevant actually for Switzerland, because clearly we know very well what wealth management is all about, is the robo-advice trend. But even in the robo-advice trend, you see that those algorithms that they have come up with, they are really adding value, and they can allocate much faster. But in the end, it's just the algorithm. At the back end, you need the funds, the ETFs, and the front end, you see that there's only a small percentage of clients that really dare to be advised by an algorithm. So some kind of human interaction is still necessary there, and if that is the case, how can you really scale? So those two, I think the jury is out. Now, to the next three, this is the way I like to kind of put it, I think there is a real future. The first one is digital assets and tokenization. Also here in Switzerland, really at the forefront of that. We are really at the forefront of that. And I do think that we haven't even scratched the surface of the opportunity that we see in digital assets and tokenization, but there is a lot to be done in order to make that successful in terms of laws, regulation, definitions, agreements within society, safety, security. There's a lot of kind of conditions that you need in order to make that successful. Once you go through there, the potential is almost unlimited there. Then something that we're in Switzerland also really want to focus on is green fintechs. And why do I believe in green fintechs? Because it basically bangs on two trends. And you know, if one trend is not enough, basically fintechs,
You have sustainability.
the green, the sustainability aspect, we know it's taking off. So I do think there's a real future there. And then maybe as the last example, here to stay and absolutely successful going forward, and certainly very disruptive for the banks, is open banking. Open banking will create the opportunity for disintermediation, for dashboarding as well, so for both corporate customers as well as consumers, being on top of your finances, being able to initiate into different banks, into different players behind that. So that will certainly disintermediate on one side, and on the other side, it will also give the opportunity for many new players to come on it, because through the open banking, they will actually have access to all of these customers. So the scaling aspect of if you're just a fintech trying to find your own customers, for example, in the payments space, it's difficult. It takes a long time. So you're probably running out of money 5 times in your life. But with open banking, you have access to all. So those are the 5 trends, I would say. The first 2, jury is out. The second 3, I think, yeah, that's really the future.
Okay, thank you very much. We'll dig a bit deeper into that later on. Now I'd like to go to Thomas Gottstein. You're joining us from Singapore. First of all, what are you doing there? And what have you seen there that you think this is something you want to bring to Switzerland, or any trend that impressed you?
Hi, Tanya, and hi, Daniela, Herbert, and Ralph. Sorry that I cannot be there, but I'm actually excited and delighted that I can be here in Singapore. You know, when I took the CEO role on the 14th of February, I wanted to come already in March to Singapore, and ever since it was impossible and closed for us to come here. But about 2 weeks ago, our regional head managed to get an approval for me to come here. Singapore is, after New York and London, our 3rd largest hub outside Switzerland. We have 3,800 people here, and it's extremely important for me to visit my colleagues, but also the clients here, the regulators, but also just to feel how Asia is actually going in terms of business, but also how it's handling COVID-19. And it has been a fantastic few days here. I'm really impressed how the region is coping with it. APAC is 20% of our revenue. It's very important for me to be here several times a year. And from that perspective, it was a coincidence that when I heard about this event that I'm here. So I'm delighted to join this panel from Singapore.
Okay, and have you seen anything in the fintech world in Singapore that you think you would like to share with us during your trip?
Well, already in 2015, Credit Suisse decided actually to roll out our digital private bank from Singapore. So we gave actually Singapore the lead on this. And it was a real success because the whole region is very digitally affine, and it allowed us to come up with some innovations that we wouldn't have developed so quickly out of Switzerland. And that was a very good move, I think. So we have seen some very promising new tools that we are offering our clients, but also internally. but also, just to see how we are dealing here with COVID-19. It's very impressive. The tracing really works. You come to the entrance here, they take your temperature with a computer, and everything is done really very professionally. So it's a very digital world here.
Okay, good. Thank you. So we have heard a few things that you also mentioned, Ralph, some factors. And I would like to hear maybe the Swiss perspective on it, how these global trends that you heard now are influencing our financial center. Herbert Scheid.
Well, thank you. I think Ralph outlined, very important trends, and they are global trends, so they are here in Switzerland too. If I just talk about tokenization or take up that notion, I mean, we are here at the SIX, the Swiss Stock Exchange, and the Swiss Stock Exchange has been, the Swiss Stock Exchange is user-owned, user-governed, so it's something quite unique in this world. So all the banks are owners of this organization here, of the Swiss Stock Exchange. And the Swiss Stock Exchange has a large project for the last 2.5 years, SDX, which is precisely digging into the details of how to tokenize securities, shares, real estate, art. And we are making huge inroads there. And it's possible because we work very closely together with the banks. We have a close link with the regulatory agencies, of close links, of course, with the Ministry of Finance and the SIF. So it is a combined exercise of all players involved. And I think that should give Switzerland a huge advantage in moving forward quickly in that field. Let me take up another point, which Ralph quite rightly mentioned, and that is open finance and open banking. And it is very important that we open ourselves as banks to the digital world. However, it has to go together with a regulation which regulates as well the activities and not only the institutions. So we still live in a world in which regulators look at banks and treat them as special entities. And the large fintech companies, the large digital companies, be it Google, Facebook, and all of them, they very often offer the same kind of products, but they are not regulated. So we have to come to a world where we are sort of on equal footing. Otherwise, those institutions who provide security to the financial systems will be disadvantaged. And that in the long term is to the disadvantage of the whole financial center. And that is not just Switzerland, that is everywhere. So these are two remarks from a Swiss perspective, from a perspective of guaranteeing the financial security of Switzerland.
So banks kind of feel that they have to compete without having a level playing field. One side you have fintechs that are less regulated and then the more established banks. What are your reactions to it?
First of all, I was very pleased to hear the comments made here in the last few minutes, which proves the fact that Switzerland is actually home to all of these activities. We branch out geographically all over the world. Proof is currently in Singapore. We branch out in the area of new technologies and into our common future, which is sustainable growth above anything else. And as a regulator, we are making the policy framework for all of these activities. And it was said it is a unique combination of political stability and willingness of the regulator to provide all these framework conditions. And we are not afraid. On the contrary, we are looking into disintermediation very openly together also with our supervisory agency. And of course, we're also looking into regulating activities instead of institutions. So this is exactly the way we're going. And we profit certainly from the the very close relationships we have with our internationally active financial market actors. And it's not just the banks, it's also the insurances. And it was mentioned the stock exchange. So it couldn't have been said better. And for us, it is really only a matter of bringing the ideas together and putting them into a fruitful future, which is, I have to say, also easily done these days with our parliament. You know, you could have the impression that in a direct democracy you are slow and you're maybe complicated. The opposite is true. We are very innovative and we have a strong following among also the politicians to go that way.
And Switzerland wants to keep on. You want to add something? Sorry.
No, I just want to subscribe. So I've been here now for 4 months, and there's a couple of kind of conditions that I see here that will make us successful, continue to be successful. So the first one is indeed, it's all about regulations. Is there appetite to change elements of laws and regulations? It's not like I want one new law for digital commerce or whatsoever. That's not how it works. It is about, you know, moving up in society and ensuring that society, from all of its aspects and all of its interaction, can become more and more digital. And therefore, it's not one law. It is about small changes in many different aspects of law. So that's one condition that you need to have in order to be successful. And I see the appetite there and the support there in our conversations. The second one is the sheer infrastructure that you need to be able to kind of have any success in a digital world, and that's right here, right? So I mean, it's 6, but it's also just, you know, the total infrastructure. And the third one is the availability of talent. You know, the universities, the attractiveness of the country to come to, because you need to bring the talent together to innovate. I mean, nobody innovates by himself or by herself. Innovation, certainly these days, is about openly sharing your ideas, openly failing on first steps. It's all about you know, those concepts for which you have to bring people together, and you see it happening right here as well. And so I think there's many ingredients, and if you then combine that with, and maybe you don't see that because most of you are Swiss, but I can see it coming from outside. Switzerland is a brand in itself. Right? I mean, you take it all for granted, maybe, but this country stands for something. It stands for that stability, for that security, for the trust, for banking, for wealth management, for innovation in many industries, So it stands already for something, Switzerland.
Okay, everyone is smiling.
Yeah, well, it's the point, right? If you live here, it's like, okay, yeah, well, this may not go fast, or that could be fast. Of course, we can all improve. But don't mistake how the world is looking at Switzerland, and it's a brand in itself.
No, I agree, and I mean, Switzerland has the ideal framework for fintechs to strive. As you mentioned, universities, you have access to venture capitals to drive innovation, a strong financial industry. So, nevertheless, however, I think there's just, to my knowledge, one fintech unicorn so far coming from Switzerland. So I wonder what are the barriers that we still are trying to break down, also because Federal Counsel Uri Maurer said that digitalization requires innovation-friendly legal framework conditions and that he wants to fight for as little barriers as possible. So what barriers are we still talking about that we're trying to tackle?
Well, there is always the question of size and market access and scalability of your ideas. And I don't know if it is really, I mean, it is of course important to all those who create a startup to one day become a unicorn, of course. But the knowledge and the path that leads to that result are just as important. And I think we have an extremely helpful environment for startups themselves. You know, they get the talent, they get I think the legal and also the tax side is very favorable. And we then have to be able to help them access the market. It can be a multiplier, like a big bank taking up the idea. And certainly these days and in the future, we have to work, and not just Switzerland, I think, in Europe and globally, to actually open markets, especially to good ideas. Switzerland is a very open market itself. We do not put any impediments to incoming, for example, fintech ideas. So there stands a lot to profit for the customers if you could work on this aspect.
Thomas Gottstein, is there anything you would like to add to what you just heard?
No, I think it was well summarized by everybody in the room. Fintechs are very important. I don't see them actually as competitors, more as partners in many cases. Sometimes they are disruptive, but in many cases, fintechs are actually partners of us. We work with them. We could never develop all ourselves. So, we have Swiss fintechs, but we have also other fintechs that we work with.
Okay, I think I have some comments here on this side.
Yeah, so just to kind of, as this is an open discussion, right?
Absolutely.
So on the point of scalability and making and supporting fintechs to be successful here in the digital world, the digital world starts and stops, and the scalability of the digital world starts and stops with the availability of an e-identity, right? And we know we have a referendum coming up for that. But it's a crucial element to see whether you can actually scale. Because one of the big hurdles for many of the, at least, the fintechs that go to consumers, one of the big hurdles there in order to come to scalability quickly is the e-identity. One of the hurdles to accelerate the digital economy in all of its facets, which is ever so important given what we have experienced just in COVID, because that is the alternative way for us if we can't physically interact as much anymore. There has to be this digital world out there that can supply and the services and the goods that you need. Digital identity, e-identity, is a core element there in order to be successful. So that could help us once we get there in Switzerland. And it could help the fintech community to grow faster.
I want to expand on the very important argument of State Secretary Stoffel. Its scalability. It's interesting. We visited a few years ago Israel, and Israel is highly digital and extremely in the forefront. And they say in the second or the third phase they have to go out. They go to these states. So it underlines the importance of scalability. A lot of fintechs so far, I mean, if you look at the digital transformation, you have to see it in kind of echelons. We are at the moment at a stage where digital transformation is particularly strong in the field of payment, of the payment sector, because it's a huge sector. Switzerland is first class in payment, but it is even better in wealth management and asset management. There we have a long tradition. Switzerland is host to more than 25% of all cross-border assets. So when it comes to digital development in the field of wealth management and asset management, I'm sure we are going to have a lot to offer. And that is not so well known yet in the world. And I think it is up to bring that out. And I think we are in a very good way for that.
Thank you. Thomas Gottstein, you mentioned before that you don't see fintech as competition, but rather partners. So I'm wondering, fintech's teams often also have a tech team, a team with a tech background. And so I wonder, what can banks bring to this collaboration? How do you collaborate with fintechs?
One of my colleagues once said, a bank these days is a tech company with a banking license. And that's basically how you have to think about it. Technology is part of almost all our front to back processes, whether it's client facing, whether it's between the relationship manager and the second line of defense, whether it's in the processing side, on the operations side. So technology is part of us, and many of the fintech entrepreneurs actually come from banks, from large banks, and where they have learned the trade, and they come with ideas, and sometimes they get frustrated because things go a bit slower with large banks, and then they go there. But we have also learned from them, you have to be agile, you have to develop new tools. With our online banking, for example, in Switzerland, we sit down constantly. We have a client experience lab. They come to our office. They say they don't like this. They would like to do more trading in options, or they would like to do more investments in ESG products or whatever. And so we work with them in constantly developing our tools. And we have learned that also from fintechs, because they are much more agile. They're much more quicker. And for example, here in Asia, we developed abilities for clients to place their order via WeChat and via Snapchat, and that is more and more happening. So we need to involve new technologies in the way we interact with our clients. And therefore you cannot say this is the large banks and this is old technology and this is fintech, because it really comes together.
Okay, so you actually gave a perfect example of how you're listening to clients. And Herbert Scheidt, you mentioned in your very first comment that you have to listen to clients. So I wonder, how else do you listen to clients? How else do you figure out what they want, where the needs are?
Well, of course, you get a lot of data, and banks are hosting a lot of data, and we have a lot of data from all our clients. We deal with it with great care, but we use it in order to understand how our clients act, what they require at what stage. And being a data-driven company helps you to understand your clients. And then, of course, that has to be supplemented with direct contact. As Ralph so rightly says, it's not only good enough to rely on algorithms. You have to mix and to have a hybrid kind of relationship based on data and of human interaction.
Mm-hmm. Okay, then banks, you all sell financial services, and with digitalization speeding up also this year with COVID-19, the contact with your clients was accelerated into the digital sphere, but I would say that's your bread and butter, the contact with the client. So how are you dealing with that now during this year? How was it? What are the findings? Where do you want to go when it comes to having direct client contact?
Actually, from what I know, it came pretty naturally. Everything was there with both the customers and ourselves and all banks. Basically provided for a very stable infrastructure. So operationally, we were all very resilient. The availability to have the video connection was there. Our staff could work from home very quickly. Completely, supported with technology. So I think it was almost natural, and a lot of the moves that we were about to take as players, but never dared to take, we were now forced to take. And basically we got the proof of being right without daring to move there faster. And I think that is what happened during COVID in anything, whether it is the video connection, whether it is the app usage and the digital services that you give there as well. It's all been there, but forcing customers to use more of it, we felt was not the way to go. But COVID basically gave that as the only opportunity for many customers now to interact with the bank, and therefore adopted their behavior and adopted these channels and adapted their behavior in order to work with the bank. So that's how you do it. And maybe to come back on how do you then listen to your clients, because you can't bring them into your lab. Then, for example, as Thomas was indicating, that clearly you would love to do that, but you can't in this way because you can't have the physical interaction. Honestly, if you work fully agile, you change your app about every week. And if elements of your app are not being used, clearly your clients don't like it. So you take them out again. Mm-hmm. And this is all about, the whole culture about, trying, failing fast, dialing back, trying, failing fast, dialing back. That's how you listen to your customers. It's amazing how much interaction you have with your customers. You have millions of contacts a day with your customers because people make payments every day. So the use of the app and the way the routing of the app works, or the services that are on the app, or the products to be bought on the app, that is all an indication of what clients like or don't like. You don't have to interview them. It's live.
Yeah.
Yeah?
You have
so
it
if they don't
recorded.
use something, they don't like it. And then you try something new, and they use it, they like it. And so it's much more dynamic. Yeah?
Anyone wants to add to that?
Well, I think, you know, what COVID has created a lot of problems, but it has helped digitalization to move forward. It was really a catalyst, as Ralph says. And it will force all the banking industry, the Swiss banks, to really think more digitally, because we have to deliver the same level of service as digital providers do. And we probably, our clients, that was a study made by McKinsey. McKinsey estimates that, you know, our clients have jumped forward by 3 years in the use of digital tools. And that means we have to quickly jump with them. And that is the task we are having ahead of us. But as Ralph says, we are very well equipped. We have coped excellently with, you know, the new situation. We had all conferences with clients, webinars, you know, 300 participating, interacting without being informed about what's happening around Corona, what's happening around the capital markets, what's happening individually with them. So I think, you know, we are on a very good path, but we know we have to move forward with a big speed.
Okay. I'm coming with a more specific question, as this is the Singapore Fintech Festival, because they are working on standardizing data exchange between banks so that individual customers can get their data from multiple financial institutions in a single place and to make appropriate financial decisions, so kind of an aggregator. Just with this idea, is this something that we would see in Switzerland in the near future?
I mean, data exchange is not a one-way thing, so it needs two to tango. So you need to have the necessary regulatory framework also in your partner country to be able to do that. And especially in the case of Singapore, but on a general basis, we're in Switzerland certainly looking into the pros and cons. And if I may add to what you said about the EID and what we learned about COVID, I think what we learned is that basically in Switzerland, your Hoover, your vacuum cleaner knows more about your habits and you allow it to know it, but not your government that tries to protect you from a pandemic. So this interface between the use of data, you giving away your data for free in many business models, that you just see the consumption side of things. And on the other hand, the tremendous impact it could have if you could use data in a protected way and also let the customer own its own data. I think there we have a comparative advantage over those regulators who just, create an open space and everything's out in the open and you're a transparent individual. Transparent not just to your vacuum cleaner, but to the whole society that uses the internet and all the apps. Yeah. So there I think we have to think clearly, and COVID gave us an incentive to do so. How could we use technology in an advantageous way so that both sides of the deal get something out of it? Yeah. And this applies for all our financial services in Switzerland. And it goes way beyond data connectivity agreement.
Okay. Thank you very much. We have 2-3 minutes left, so I just want to leave everyone for a last comment to anything you heard or something questions that you're thinking about for 2021. Who wants to go first?
Well, I can go first. Yeah. I think, I want to sort of put on and sort of underline what State Secretary Stoffel says. We have to protect data. It's fine to open everything up, but data is private, and we have, our clients have a right to demand, their own, to determine what is happening with their data. That's point number one. Point number two is, it's fantastic to move forward digitally. We have to be aware of cybersecurity. So cybersecurity will be equally important as all the other things we are talking about. So that will be a concern for 21, which we have to address.
Thank you very much. Ralph Hammers?
Yeah, so to add, so cybersecurity is certainly one. The more digital the society becomes, the more important these services become. Therefore, the more interesting services, not only financial services, but any kind of day-to-day services, utility services, whether it is power supply, air traffic control, whatever, you know, everything that's crucial to be safe in a society will be much more the subject of cyber attacks. And for that, you know, there is no institution that can do that alone. So that needs a real concerted effort and open communication between institutions across sectors and with government there as well. So cybersecurity is one, and you see it actually on the rise anyway. Maybe the second one is that innovation is not this thing that we can determine to be basically a trend. It is here to stay. Banks and companies have to embrace the digital future. For that, you should realize that you can't innovate alone, and nobody has a monopoly on good ideas. Therefore, you have to be open, which specifically for banks is not the easiest, right? Because we have to be careful as to how open we can be in that. But nevertheless, if you want to innovate, you have to be open. Therefore, you know what? Just to add to what Thomas said, the symbiotic relationship with fintechs is right there. That can help us. The fintechs are the youngsters. They are fast. They are innovative, and the banks have the brand and have the scale. And it's that symbiotic relationship, I think, that we can work on even more so, ensuring safety around data and security.
Thank you very much. And the last word goes to you, Thomas Gottstein.
I agree that especially around cyber, we need a lot of collaboration, because I think it's one of the biggest risks we have as an industry. So that's certainly one element that I would also fully subscribe to what Ralph said. And the other, given that I'm already now in Singapore, it's almost an obvious one, but the collaboration across regions and to learn from each other is very important. So I think there's a lot of things we can learn also in Asia, and we should be open to new solutions.
Great. Thank you very much. Thank you to all the panelists for those insightful comments. I'm handing now over back to Ruth Metzler, Chairwoman of Switzerland Global Enterprise, for some closing remarks.
Thanks to everyone for those exciting insights. And let me wrap up. Switzerland's financial and financial technology industry is among the most innovative in the world. The Swiss federal government is determined to increase Switzerland's leading role among global financial centers even further by strengthening sustainability and innovative technology, as well as the traditional Swiss strengths of stability, trust, and security. Switzerland's local and global financial institutions are doing their part to further strengthen the innovation ecosystem in the country. The new platform, Finance.Swiss, showcases this ecosystem and provides you with the right information and contacts you need if you are interested in joining us. Overall, Switzerland offers strong values and an effective business environment to provide best-in-class opportunities for innovative individuals and entrepreneurs to find a business-minded environment to develop and successfully progress their ideas. For investors, to find innovative, creative startups and young companies that engage deeply in future ways of doing business, providing excellent possibilities for growth and scale. And for talents and to-be entrepreneurs, to find adequate job opportunities and inspirations to participate and engage in future-shaping projects. A great opportunity to meet some of our entrepreneurs in person and learn about their ideas is our digital pavilion, encompassing, among others, regulation technology, blockchain solutions, big data and analytics, and algorithm trading and cybersecurity. It is the job of the organization I'm chairing, Switzerland Global Enterprise, to support Swiss SMEs and startups with their international business. Should you want to learn more about Switzerland as a business location in general, it is also Switzerland Global Enterprise as Switzerland's official organization for investment promotion that will help you, digital, or in our offices all around the world. How does the program go on? After a short break, by 11:05 a.m. CET, Swiss viewers are welcome to continue here today with the Innovation Hub session by the Swiss National Bank and Bank for International Settlement. International viewers can watch this session at 4 p.m. CET on the Green Shots channel. In 2 days, we will welcome you again from Zurich to discuss green fintech and sustainable finance as part of the Global Impact Summit. We are looking forward. In the meantime, many more exciting insights at the World Fintech Festival, and stay safe.
Good morning, everyone, and welcome to this session on the topic of the role of central banks when it comes to innovation, followed by a panel discussion on the implications of asset tokenization, stablecoins, and central bank digital currencies for financial markets. I'm Tanja König, and I'm very pleased to guide you throughout the next hour. Our first keynote speaker is the head of the BIS Innovation Hub. Benoît Coeret, the stage is yours.
Thank you, Tanja. I am very pleased to be speaking at this global event, straddling Singapore and Switzerland. What makes it special for me is that the Innovation Hub is local in both leading financial centers. We established offices in Switzerland and in Singapore last year, together with another office in Hong Kong. And yet, just like any good startup, we are expanding. By this time next year, we plan to have centers in Toronto, in London, in Stockholm, and in Paris and Frankfurt, as well as a strategic partnership with the Federal Reserve System in New York. So, although we haven't been around for very long, we've been very busy. And this session will showcase one of our first reports, the result of a collaboration with our partners, the Swiss National Bank, and SIX. The report details not one, but two proofs of concept, and it's called Project Helvetia. But before we get on to Project Helvetia, I want to talk for 5 minutes about central banks and innovation. In many minds, these are still somewhat at odds. And that's not unreasonable. But if that describes your mind, I want to convince you otherwise. First, central banks have mandates to anchor stability, monetary and financial stability. With that comes a natural inclination towards conservatism and caution. And that's true. Yet, when central banks intervene to steady the economic ship in rough seas, they can be brave and resourceful. As the saying goes, life's roughest storms prove the strength of our anchors. And from the maelstroms of the financial crisis 10 years ago to fighting the waves of a global pandemic, there have been few days of calm for the financial system. It was maybe easy to miss, yet central bank responses to both crises were extraordinarily innovative. New ways were found to get liquidity to all corners of the financial system. Swap lines were organized to smooth cross-border funding. New monetary policies were launched on a massive scale. Novel market operations were implemented almost overnight. How quickly those cautious central banks moved to steady the ship. It wasn't easy. I know firsthand the difficulties of taking new and untested approaches during a crisis. Sometimes you don't have to change much. The outright monetary transactions program of the ECB, OMT, was called by some the most efficient monetary policy instrument ever because it never had to be used. Nonetheless, the intuitive view of innovation is different. Innovation is all about change. I'm talking about Schumpeter's creative destruction or early Zuckerberg's moving fast and breaking things. And while the dramas of the last decade raged, this change has reshaped our world, and fast. That widespread digitalization is altering our life. That's undisputable. To say that it's happening ever faster is a cliche, but it's nevertheless true. While COVID-19 presents an immediate economic challenge, it has also shown how quickly longer-running digitalization trends can accelerate, and we've heard about it on the last panel. This calls for a different response by central banks. This is not a crisis, it's evolution. Yet, speed is still of the essence. The world and the financial system are changing. Central banks need to understand these changes and have enough flexibility to respond to them. And we can see this in our work on central bank digital currency, or CBDC. The BIS and a group of central banks, including the SNB, published a report in October setting principles for retail CBDC. The first principle was the preservation of monetary and financial stability. Disruptive innovation, the kind that breaks things, is contrary to central banks' public policy objectives. Central banks abide by the monetary equivalent of the Hippocratic Oath. First, they do not harm. But the challenge remains. Central banks must move fast if they are to have the flexibility to evolve in this new system, to evolve so that they can continue to provide trusted money, a common public good. Yet, how can this be combined with safety? The answer is always through cooperation. That brings me to the BIS. At the Bank for International Settlements, we are celebrating our 90th birthday this year. 90, not 19, 90. Our history is a history of cooperation, where central banks meet to coordinate and promote global monetary and financial stability. In this context, it is natural, and arguably it is necessary, for the BIS to set up its own innovation hub to gain a deep understanding of new technologies, to share and pool knowledge internationally, and to explore how we can develop tangible public goods for our community. As I said at the start, we are global, but we are also local. I am speaking at the Singapore Fintech Festival from Europe to an audience from all corners of the globe. That mirrors one of the greatest opportunities and challenges of new technologies. They do not recognize borders. The strategic themes of the Innovation Hub are global and matter to everyone: effective financial supervision, modern payments and banking, data platforms, cyber resilience, green finance, and of course, CBDCs. By pooling our knowledge, we can all benefit and move faster together. By cooperating, we can do safely together. By bringing together public authorities, we can harness innovation that benefits the many and not the few. When it comes to CBDC, Project Helvetia is the first deliverable under the Innovation Hub CBDC work plan. The second phase will explore cross-border issues for CBDC in accord with the G20 roadmap for improving cross-border payments. Our centers in Hong Kong and Singapore are also looking at these issues. While no one really knows if distributed ledger technology, DLT, is the future, the technology is now mature enough for the private sector to look and put it into production. Examples include SDX, also the recently renamed DM. At the Innovation Hub, we are building our own capabilities to conduct experimentation on DLT. It's easy to move fast and break things. Not breaking things is more difficult. To do the latter, we need to move together. And that is why central banks are doing. Project Helvetia is an excellent example of this and marks just the beginning of the further evolution of central banking. Central banks are pragmatic innovators. We are innovating because we have to deliver on our mandates and because it is our job to maintain trust in our currencies. It was John Kenneth Galbraith who said, the enemy of the conventional wisdom is not ideas, but the march of events. Central banks are open to new ideas, and they're not planning on being overtaken by events. Thank you for your attention.
Thank you very much for your interesting insights and congratulations on this exciting collaboration with the Swiss National Bank and SIX Group. So I have a question for you. The Innovation Hub is one example where central banks are trying to do things differently. But from an alternative perspective, how do you see technology changing central banks in the future?
So that's a great question. It's a great question because I don't have the answer. But we need to prepare for it nonetheless, so we have to think about it. I would think of at least 3 ways in which innovation will change the way central banks operate. One is known, and it's about making new instruments available. So to give you some examples, we can use now artificial intelligence, machine learning to improve bank supervision. We can automate data provision in bank supervision. We can use real-life streaming to understand better what's going on financial markets. And we do have a project in the Swiss Center called RIO on providing live information on the FX market. Okay. So that's about instruments. Second is about the culture and the skills and the people. Innovation can help us bring new people in the central bank universe, and it can help us change our mindset so that we can challenge established ideas, and so that we can allow ourselves to fail fast and fail forward, which is the essence of what innovation is about. And the last one is more uncertain, but nevertheless important, and it's about financial structures. Digitalization is changing financial structures, and in many aspects it is blurring the boundary between banks and non-banks. And it might change the way central banks implement their policies, including monetary policy, in a digitalized environment. So the first one are known knowns, if you want. The last one is a known unknown, and there are many unknowns.
Which we'll see soon in the future. Thank you very much, Benoît Curé, head of the BIS Innovation Hub. Thank you. Thank you. Next, we'd like to hear the perspective of the Swiss National Bank. Therefore, I'd like to welcome Andrea Mechler. She's a member of the SNB Governing Board here on stage for her keynote speech.
Ladies and gentlemen, I would like to thank the organizers of the Singapore Fintech Festival Satellite Event Switzerland for the kind invitation. In the next few minutes, I will build on Benoît Curé's remarks and talk about Project Helvetia. My talk addresses the following 4 questions. Why is Project Helvetia important for central banks, and hence for the Swiss National Bank, the SNB? What have we done in the context of this project? Which core insights have we gained, and what comes next? First, why is Project Helvetia important? A statutory task of many central banks is to facilitate and secure the operations of cashless payments. The SNB fulfills this task by commissioning SIX to operate the most important payment system in Switzerland, the real-time gross settlement system, SIC, in which payments are settled in central bank money. Like many other central banks, the SNB must also contribute to the stability of the financial system, including financial market infrastructures. Technological change is shaping the way we perform our tasks in these 2 areas, but that's not exactly new. What is unusual today, as Benoît already mentioned, is the scale and the speed of technological change. The private sector is investing heavily in distributed ledger technology, DLT, and tokenization for wholesale applications. This process could very well transform how financial markets are organized in the future. 3 particular changes are worth highlighting: automation, speed, and decentralization. First, on automation. Securities and cash could take the form of tokenized assets, supporting programmable business logic, also called smart assets, to improve existing post-trading processes by automation or to enable completely new services. Second, on speed. The trading and settlement of tokenized assets on a DLT-based infrastructure would enable atomic and instantaneous settlement, increasing not only speed, but reducing costs by rendering the need for a central counterparty obsolete. Third, on decentralization, the underlying distributed ledger technology may enable financial market infrastructures to become more decentralized, enabling transactions to be conducted peer-to-peer and potentially adding to the robustness of today's infrastructures. In case DLT and tokenization can deliver significant improvements over existing technologies, central banks must understand the potential impact on the financial system. This is why the SNB decided to join forces with the BIS Innovation Hub and SIX for Project Helvetia. The key question we addressed in the project is how to settle in central bank money, tokenized assets exchanged on a DLT-based financial market infrastructure. Settlement in central bank money, which in Switzerland takes place in the SIC system, enhances the security, efficiency, and stability of the financial system, as central bank money, by definition, bears no credit risk. Second, what have we done so far? In what we have come to call the first phase of Project Helvetia, we investigated two approaches to integrating central bank money into the DLT-based financial market infrastructure of the SIX Digital Exchange, or SDX in short. This is illustrated in slide 1. Both approaches were explored in the form of proofs of concepts, POCs, which leveraged the live SIC and the near-live SDX test platforms. In the first approach, referred to as POC 1, the central bank, in this case the SNB, issues a wholesale central bank digital currency, wholesale CBDC. This approach allows a fully integrated settlement of a securities transactions, both the delivery of the securities and the payment in wholesale CBDC on the DLT platform. In the second approach, referred to as POC 2, an interface between the DLT platform and the real-time gross settlement system, the RTGS, is established. While the securities leg is settled on the DLT platform, the cash leg remains within today's RTGS. What have we learned? Project Helvetia was a success. It showed in a realistic, near-life setting that it is possible to provide central bank money to settle tokenized assets using both approaches. In addition, the analysis showed that the transfer of wholesale CBDC can be designed to be legally robust under Swiss civil law. Comparing the two POCs reveals different benefits and challenges. This is shown in slide 2. The advantage of creating a wholesale CBDC is that the functionalities possible with tokenization can be fully leveraged. In this sense, the first approach is the more innovative and comprehensive solution. Yet, issuing a wholesale CBDC that enables all of these possibilities would also bring new operational challenges and raise novel policy and governance questions for central banks. The second approach is closer to the status quo and thus less disruptive, and the impact on other areas is accordingly less pronounced. But limiting functionalities may also imply foregoing efficiency gains. Fourth, what comes next? The final report on the first phase of Project Helvetia was published just last week. Despite the success of the project, several important issues still need to be addressed. Just because a central bank can do something does not mean it should. Project Helvetia is a first step towards developing a broader and more complete understanding of the wider implication for the financial system and the role of central bank money in any future system. The process for continuing this work as part of phase 2 of Project Helvetia is already underway. As was the case in the now concluded first phase, phase 2 will be exploratory in nature and as such will not allow the drawing of any conclusions regarding future decisions either for or against the introduction of a wholesale CBDC in Switzerland. Ladies and gentlemen, at present, Switzerland's financial market infrastructure is reliable, robust, and efficient. Irrespective of the technology that will ultimately prevail, for a central bank such as the SNB, one thing is crucial. The high level of security and reliability of the country's financial market infrastructure must be safeguarded under all circumstances. Project Helvetia is genuinely helping the entire central bank community to gain new insights and develop expertise. It thereby helps us to continue to pursue our statutory task in the fields of payments and financial stability with cutting-edge technology, even in a rapidly changing world. Thank you for your interest and attention.
Thank you very much, Andrea Mechler. It's interesting to hear how the SNB is exploring a potential future. Question to you. You mentioned phase 2 of Project Helvetia. Can you share with us what questions you, together with your partners, will be addressing there?
Absolutely. Phase 1 was a success. I've mentioned it. It is a decisive step forward, particularly because it uses a near-life infrastructure. So it's not just theoretical, but many questions remain unanswered. And how do we go about to answer them? Phase 2, what are we going to do? The most important thing is we want to integrate this work into an end-to-end basis. What does that mean? We want to integrate what does it mean to issue and settle a wholesale CBDC all the way into the core banking system. So we want to look from the bank's balance sheet all the way to the central bank balance sheet, going through the platform SDX and also our payment system. Only then can we really be able to assess the relative performance in terms of cost, efficiency, but also safety of a wholesale CBDC, a private coin, or the system that we have right now, the link to the RTGS. There's another, this is what we call the broadening, but there's one more that is particularly important as well, is a broadening across border. So what we want to do right now, this is for Switzerland, in Switzerland, we want to see what happens if we do that exercise cross-border. What does it do when we integrate different types of actors, different types of platform? That is also a very important part of our question.
Okay, so we're very excited to hear more about phase 2 of Project Helvetia. Thank you very much, Andrea Mechler.
Thank you very much.
Thank you. And as a third partner of Project Helvetia, and more importantly, our location host today, I'd like to welcome Jos Dijsselhoff, CEO of Six Group, for some welcoming remarks.
Thank you very much for the introduction. Thank you very much, everybody, for joining us. Good morning, good evening, good afternoon, wherever you are in the globe watching this. I first would like to thank Andrea and Benoit for their inspiring and insightful keynotes. That was a really good insight in the collaboration and the way we work together and the depth of the projects that we are pursuing. When back in October, the Swiss National Bank and the BIS approached us, we were naturally, of course, very excited to join this initiative. As an operator of the Swiss financial market infrastructure, we welcome the initiative to conduct more research into innovative financial technologies in Switzerland. And we've been very pleased to contribute to this initiative with a very specific project, a use case, through our 6 digital exchange, to explore the technologies possible with the SMB and what we could do with token-based financial assets and currencies, and bring that together into a financial ecosystem. Innovation is in the DNA of our company. At SIX, we innovate continuously. We always want to see where there are opportunities to further improve and to further strengthen the capabilities that we provide to our customers, of course with the premises of stability, security and safety, but we have to continue to innovate. And with the 6 digital exchange, the first real end-to-end digital exchange that is being built across the globe, we are following this path purposefully for a while now. To get back to the proof of concepts that we did on the subject of digital central bank money, will not only provide technology insights, but those proof of concepts, and also specifically because they are done in a near-life environment with real systems and real processes and people operating it, this will send also important signals to the market and to its participants to take a step further in exploring DLT, technology and digital assets. Project Helvetia is a tangible example of the value of cooperation as changes gather on a quick pace across the globe, and innovation only happens through collaboration. And I'm proud to say that we have a long-standing relationship with the SMB. This is just another example of the strong collaboration we have between our 2 institutions, and being on the forefront of innovation and achieving real results. So not a theoretical report, but real results, as the report clearly shows. Crucially, it shows that the Swiss Financial Center is true in its values, the willingness to cooperate and to talk to each other, not only between banks and financial players, but also academia, regulators, and of course the National Bank and the politicians. The openness of all parties for such initiatives and for future technologies is remarkable. The cooperation was really excellent. It was an open and transparent collaboration, and it was pragmatic. The chosen approach in this initiative also showed something else, of course. It shows that private system operators and central banks both do have an incentive to persevere the use of safe money as well as safe and efficient market infrastructures. Central bank money is fundamental to SIX as a financial market infrastructure provider. SIX has been operating on behalf of the central bank, of course, the interbank clearing system in Switzerland. It should be noted that the RTGS system that we have in place now is highly successful, was designed 40 years ago, is still in place, but of course continuously adapted and modified and modernized. And I'm confident that with this initiative we will see something new in its nature, but similar in terms of collaboration. The joint work of exploring the possibilities to make central bank money available on the digital exchange that we're building is a key driver in setting up an ecosystem and send strong signals to all market participants. I strongly believe that banks and other financial intermediaries are best placed to drive these innovations. We see the role of the central bank to inspire us and to implement what they see in the market. The role of the central bank is to field and to identify what is happening across the globe and in the financial markets, in the home markets, and to bring that then to fruition in initiatives with private partners like SIX, who then can support these innovations and create synergies. But it's not only about SIX, of course, it's the whole Swiss financial market that will benefit from thought leadership and innovation by the Swiss National Bank. Project Helvetia has been a success, as Andrea mentioned, and Benoit also. It shows a realistic near-life setting that it is possible to provide central bank money to settle securities transactions using new technologies, basically on DLT in SDX. It also shows that central bank is wishing to do that, have an option. Not only is it feasible to link the existing system, but also a new kind of central bank money, a wholesale central bank digital currency could be issued. It is important to note that just because a central bank can do something, it doesn't mean it has to. Project Helvetia is therefore a first step towards the further broadening of understanding of the wider implications, the potential advantages and feasibility for the financial system. To sum it up, we at SIX are committed as our partners to this initiative and to further progress in this initiative in the same spirit as we've done in phase 1. This has only been a first step. our Swiss digital ecosystem, and the SIX Digital Exchange is about to take its first elements live next year. And it's very open to continue, of course, the collaboration with both the SNB and the BIS and our financial partners. And we thank the SNB and the BIS for the collaboration so far. Thank you very much.
Thank you very much, Jos Dijsselhoff, also for having us here today. Thank you. So we have heard from our keynote speakers about the importance of the ecosystem for enabling new technologies to shine. For better or worse, a wide range of stakeholders and the legal and regulatory environment will determine if and how any new technologies are adopted. Our panel now is going to dig into these issues using securities and DLT as example. First, we'll clarify the benefits, and then we'll move the perspective wider to include a legal and a bank's perspective. And I have the perfect panelists for this. I'll start with, actually I wanted to start with Tim Grant, but then is everyone here yet? As I can see, we have Matthias Imbach. Okay, Tim Grant. So, Tim Grant, hi. You're joining us from New York. Tim Grant is the head of the SIX Digital Exchange. He has over 20 years of deep technology and management expertise across institutional capital markets and enterprise blockchain businesses from his time serving senior positions in financial services, including CEO of R3 Lab and Research Center, Managing Director of UBS O'Connor and UBS Investment Bank, and more recently as founder and CEO of DrumG Technologies. Hi, Tim. Dan,
hi, everybody.
Great hi. Then here in Zurich, I'm joined by Corinne Zellweger-Gutknecht. She is professor for private law and economic law at the University of Basel. She's an expert in the fields of money, currency, and central bank law, as well as on cross-cutting issues between private and financial market law. Right now, she's researching the influence of digitalization on public and private money, payment systems, and the financial market, as well as the recording of crypto values in private, insolvency, and currency law. And last but not least, who we saw first, Matthias Imbach, who is joining us from Singapore. We'll switch the image soon, but Matthias Imbach is joining us from Singapore. Hi, Matthias.
Hello.
Hi.
Pleasure to be here.
He's the co-founder and CEO of Signum Singapore, transitioning to Group CEO in 2021. Signum is the world's first digital asset bank harnessing the power of DLT. In March 2020, Signum Bank announced the launch of its first digital Swiss franc token. So we have a very international panel here. I'd like to go back to Tim and start with you because we already heard a little bit about the technological developments at SIX, but give us an elevator pitch how SIX Digital Exchange is different and what your plans are with it.
Sure, and very exciting to be here, especially in the context of the work that we announced last week with the Bank for International Settlements and the Swiss National Bank. Really big step forward for us. But let me take a little step back actually and just give a quick overview of SDX for those of you that may not have the full story. And Jos earlier, the SIX CEO gave a good view of our aspirations and the importance for SIX of putting this together. I think it's good to go back to where we started in 2018. SIX, which is a very important and significant market infrastructure operator and provider, not just in Switzerland but now in Spain, having acquired the BME in Spain in 2020, is really looking forward and thinking, well, what's going to happen to the landscape over the next 10, 20, 30 years? And a couple of years ago, it became clear to the SIX executive board and the board of directors that this movement into distributed ledger technology, into this new digital asset era, is now no longer really a question of whether it's going to happen. It's more a question of when is it going to happen and how is it going to happen. And I think it's an extraordinarily bold move and a very visionary move of SIX to to look at that and say, instead of being disrupted, and it was interesting to hear Benoit in his speech mention, not sure how many of you called it, the Schumpeterian economics. Joseph Schumpeter was an economist in about 100 years ago, around the 1920s. And he had written about something he called creative destruction, which is what Benoit was referring to. And the idea effectively is that disruption often has a negative kind of connotation, but actually it really has a creative element to it. It's important that we do deprecate the traditional technologies, or at every point in our evolution in anything that we do, and actually move to the next phase. And I think that's the visionary bet that SIX has made. You know, we believe in this, therefore we're going to disrupt ourselves, and that is explicitly the goal. Now, we know this is going to take a long time. We know that this is going to be not happening overnight. Rome wasn't built in a day, and digital market infrastructure for the globe, which is what we're aiming for, will not be built in a day or a year for that matter. It might take us a decade, but we need to get on that journey. And so SIX Digital Exchange is set up to really begin that journey in earnest. And we've been working for 2 now, building a central securities depository, a CSD. We're working with FINMA to get those licenses, and we'll have those, as Jos said, next year, and looking to go live in the first half of next year, depending on those licenses and when we get them. But I think the last piece of the puzzle is that we're really doing new things here, and I think that's where the distributed ledger technology comes in. We're building the CSD on DLT. This is a world first. This has never been done before, to build a CSD at this level of institutional marketplace, where clearly the level of resilience, robustness, all the trust, the security are non-negotiable for big institutional clients. That's the way they're used to operating. That's the way they're used to getting that service from SIX. So we will continue to do that. And then, of course, you need digital currency, and that's where this all comes together. The central bank digital currency or commercial digital currency, which we'll be using both of, allows us to go and do what we do. And Andrea Mechler had a great sort of exposition of the value and the benefits of doing this. So we are at SIX Digital Exchange the expression of that bet, and of that visionary movement for SIX. Tanya.
Yeah, so you mentioned it has benefits, value. So what do you see as the most important gains when using DLT and tokenizing assets? One, and then beyond the technology, what do you still need to realize them?
Yeah, so. It's the journey is indeed a journey, and I think having been involved in this blockchain and digital assets in capital markets, in institutional capital markets for 5 years now. It's been almost 5 years to the day since I really got into this space, and I can tell you that the journey's really starting to get moving now, but it's still very early in its journey. And I think that's a really important thing to state to everybody in the space. You know, we can't expect magic to happen overnight. So in terms of benefits, if we think long term, we've got massive efficiency gains that we can harvest through using this technology, through all the things that Andrea and Jos and Benoit mentioned. You know, there are fewer intermediaries. There's mutualized processing, which is a very powerful concept of what DLT allows. It allows us to connect and process in real time together. Means we don't have to check things and reconcile things, which has a huge potential value to us. So efficiency is one category of operational processes, communication, speed, etc. All the dimensions of that, and that will slowly kind of build up as we start to go from our first maiden bond issue, which we plan to do next year, all the way to having functioning marketplaces all over the world, which is our goal. But there is another side of it which is really important, beyond just the efficiencies, which is new business models. There's no question, if you think back to the internet, that most of us have kind of consciously lived through that from the early 90s, the 90s through to today. We couldn't have conceived of so many of the things like Uber and Airbnb back in the 90s. We would never have been able to imagine that, because it just wasn't something that we could see as the art of the possible. And I think what we'll see is something very similar here. we can't imagine the new business models and the new roles and responsibilities that everybody's going to take in this new world. And as a result, it's going to be very exciting for us to find that out. But it's also very important for us to be creative and to break from the dominant logic of the 20th century where we've come from, and think of ourselves as 21st century beings as we consider how we're going to re-platform and re-engineer how we do business together. So efficiency and new business is really what needs to come together, and what's required to get us there. We need everybody to get on the train and come with us. And that's, I think, the call to arms for everybody. You're hearing these sorts of announcements now. They're coming thick and fast. We're not the only ones. It's time to get your institution involved and really commit to being on this journey, because then we can all do it together, Tanya.
Thank you very much, Tim, for that message. So we continue with Matthias, that I want you to take us a level deeper. What is it that banks can do with tokenized assets? Where do you see the most important gains from a bank's perspective?
Thank you, Tanya. So basically the way I look at it is a new avenue or an additional avenue for banks to create value for their clients by, on the one hand side, offering new types of products and also benefiting from the efficiencies that Tim has laid out very nicely, which can lead to operational gains, lower pricing maybe for a change, and as a result, higher competitiveness also for banks in the marketplace, and ultimately leading to what banks are striving towards, managing more assets, higher assets under management, and hopefully also assets that are traded, from which again also there's a business opportunity for banks. But the question is, how do we do that? How do we create new products, and what types of products am I referring to? And here it really, tokenization opens up a new world of unique investment opportunities. And one tangible example is the ability, for example, to tokenize and fractionalize art, something that so far has not been possible. But even more broadly, I feel we will be on a path which will lead to a convergence of private and public markets. In today's world, the private market sector is thriving on information asymmetry, and outsized returns are achieved by those who have access to this information. And with tokenization, I feel it will lead to a reduction in information asymmetry, a broadening of the accessibility of such investments, and as a result, many years down the line, it will be a path, ultimately more democratized access to capital as well. But on the efficiency side, here I can only repeat what Tim has said. We have, of course, the immediate delivery versus payment. This is an amazing feature of that technology, atomic, direct, instant settlement. It really brings significant operational efficiencies and takes out costs, but also the ability to manage corporate actions such as the payouts of dividends, etc., much more efficiently. And last but not least, and I think that's again a point which many may underestimate for now, I do feel it will indeed open up very different and new business models that we may not even conceive yet. And I'll just give you one example. It could lead to a situation where we have a very different and new engagement model between companies and their investors. So far, there's these referral programs where we have bonus points, etc. But in the future world where you have the ability to create micro shares, why not make your customers co-owners of the firm? It doesn't mean that they would then also have voting rights, but you could literally create a new ecosystem of how you interact with your clients, and maybe this will lead to different new behaviors that we may not even know yet about.
Okay, thank you very much, Matthias. Then, Corinne, now to you. You need to help us with a little bit of context here. So technologies like DLT are evolving quickly, but how does the legal basis keep up? That's one. What are the upcoming innovations to the current legal frameworks? What are the big challenges?
Yeah, thank you, Tanya. It's a great question. I see basically four moving targets. So it's private law, regulation. At an international level, everything will revolve around the question of legal interoperability related to the first two areas. And when, not if, when central banks decide to issue CBDC, either wholesale or retail, this will also affect monetary law, central bank law, and of course also constitutional law. Now, with regard to the private law and the regulation, indeed, some countries have developed legal novelties, among them Switzerland as well. And I will bring forward some examples to illustrate that. Looking at other jurisdictions, such as, for example, the US or also on the EU level, we're rather still on a drafting stage. I'll come back to that a bit later. Now, in Switzerland, the Swiss Parliament has just adopted an umbrella decree, which is going to modify a number of existing acts and laws. And I think the approach that Switzerland has taken is a quite elegant way. In private law, everything is about the question, what rights do I have as a tokenized asset holder? So towards the issuer, if there is an identifiable issuer, towards anybody else, so my creditors, my wallet provider, my crypto exchange, the potential buyer I want to transfer the asset to. So this elegant approach, to give an example, is the umbrella decree does not address this highly disputed question whether an asset, a tokenized asset, could be some kind of an ownership right or the like. Rather, it tackles the area where this issue is most crucial. It's insolvency law. So it just modifies the insolvency law, stating that if you hold tokenized asset with a bankrupt custodian, then, I'm simplifying, but nonetheless, then now this does not fall in its estate anymore, but you can extract it. So it pushes it a bit closer to property or ownership without having to say that it is ownership or property. So that's rather elegant. Second example relates to financial market law. There we will create a new financial market infrastructure, the DLT trading facility. So why do we do that? We've already heard that trading with tokenized assets just makes sense, basically, if you can offer one-stop solution on a single platform, trading, settlement, custody, etc. So far this has not been possible, and the DLT trading facility now opens up this possibility. And it brings another novelty with it. So far, if non-regulated market participants want to directly trade, so you and me, without intermediary on a non-tiered platform, this is only possible on an OTF, on an organized trading facility. So this exists already, but who can operate such an OTF? It's just banks like Signum. It's trading venues such as SIX. But not everybody else. So there was a market hurdle for innovators, for financial, for fintechs, and with the DLT now being allowed also to operate such a DTF, we lower these barriers for new participants. Looking across the borders, I just give two brief examples and then I'll stop. So looking at the EU, you have this new regulation from the EU Commission on market and crypto assets, the MiCAR. And regulations are thought to be implemented directly in all member states. So you clearly can see that the Commission wants to implement at a very early stage a harmonizing solution. And it does it by defining crypto assets in an extremely broad way, saying that this covers all digital representations, values or rights that are traded or transferred on a DLT technology or the like. So this means that also assets that so far has not been covered by any financial regulation could now fall under this new regulation just because of the fact that they are represented now on a DLT. I have my doubts that this is really a technology neutral approach, but yeah, they're trying to harmonize. And well, I could go on, maybe come back to that later, but yeah.
Thank you very much for giving us a bit more context. Then I go back to you, Matthias. From your perspective, how important is it to have a cash token on a DLT instead of a link to traditional banking system? And assuming there is a cash token for banks to use and hold, does it matter whether it is a wholesale CBDC or a stable coin? Is there a case for having both?
Okay, that's a very interesting and good question. So first, I would say cash tokens are needed to holistically benefit from all the advantages that we've listed that DLT, that the blockchain brings. If we want to transfer an asset on a ledger on the one hand side and then rely on the traditional fiat system, and in brackets I want to make clear, which is highly scalable and works very fine. But if we do that, we have a little bit of a technology infrastructure break, because on the one hand side, we shift one asset on the ledger and the other, we rely on an existing infrastructure. Only if we bring both legs, both the asset token and the fiat side on chain, we have that instant settlement opportunity and all the advantages, particularly in the post-trade arena. And hence, yes, it's to the first question, it's highly important. With regards to the second question, I think there's a lot of preconceptions and hypotheses out there. Sometimes I feel also misconceptions. I'll just address two and give you my personal opinion. One of the things that I often hear is that the moment national banks and countries issue CBDCs, for example, this will be the end of cryptocurrencies. And I've never really understood that, because it's something very different. It's a different use case. CBDCs is an upgrade of the infrastructure, the payment systems, and hopefully also helping players such as us to then settle asset tokens more efficiently. And cryptocurrencies, on the other hand, have different use cases. I've never personally believed in a Bitcoin as being a cash substitute, but rather a store of value, and other tokens bringing other innovative solutions to the market. So hence, that's, I would rather argue provocatively, the more CBDCs we have, there will be more ways to on and off ramp cryptocurrencies, for example, because again, we have that on the both legs on the same infrastructure. The second question is, does it have to be CBDCs only, or will there be CBDCs and also privately issued stablecoins? Here, again, I think it depends a little bit on a number of developments. Will central banks mostly go for wholesale CBDCs, or will some, I think China, for example, is going down that path to really go down to the individual of everyone having such a wallet. That is one element. Second is related to regulatory topics. My current view is that probably to some extent both will be needed. I personally hope very much that we will see many and more such CBDCs coming to market, even though I think it will take years, not just months, until this is actually happening. And this is probably for good reasons, because many questions still to be answered. But there will still be the case for privately issued stablecoins. We've done that at Signum with the DCHF just because we needed it to harness exactly the benefits that we're referring to. We could not have a 24/7 DVP settlement, delivery versus payment, instant settlement on our tokenization platform without that asset. And that is my last comment I would like to make. If what is really important now in the next phase, particularly in countries such as Switzerland, is that the key market players are coming together and starting to think about standards, how we can make sure that there's flow, there is the ability to create flow across the different banks and also financial market infrastructure providers such as SIX, SDX, etc., so that we can create that pie, because it's still very very small, and we're only just starting.
Thank you, Matthias. And I come back to you, Corinne, for a bit more broad perspective. One of the benefits of tokenization is reportedly a better cross-border environment. Do you agree, or will differences in law and regulations stymie this? If jurisdictions start updating their laws for DLT, will we see even more divergence across borders?
Well, a better cross-border environment, that was one of the major value proposition also from Libra, now Diem. Let's create a private global stablecoin, new infrastructure, and we will overcome all the existing hurdles. So it's not, of course, it's not that easy. And if, again, we look across borders, we see examples at EU level, we see examples in the US. I just give one related to the US. There, a bill has been, there were about 50 bills now introduced in the House of Representatives and in the Senate to amend law regarding tokenized asset. But one I want to mention, this is the Digital Commodities Exchange Act, which aims at putting trading facilities that trade with digital commodities, among them currencies, cryptocurrencies, under the responsibility of the commodities regulator. And why? because so far these trading facilities have to comply with 53 state regulatory frameworks if they want to act in all the states, which of course is not feasible for new players. So, and this is it's just one example, and it stands for many others, what we are going to face also on an international, on a global level. So it's all about harmonization. It's about finding standards, as just Matthias Imbach has said before, and it's very important that we try to talk from the beginning. I'll address how we could do that, and so I'm a bit skeptical with regard to regulation, because regulation is very tempting to be used also to protect your borders, to protect your market. So I'm a bit skeptical how far we are going there to really create an environment that is open. With regard to private law, we should try to regulate in a way that leaves leeway for a broad interpretation that is in harmony with foreign laws. And I give an example from Switzerland. I think, again, here we have found a nice way. We've created a so-called digital ledger security, and the law just states it is transferred on the ledger according to the rules of the ledger. But it does not qualify what this transfer is. And this gives the possibility to interpret it in a harmonized way with regard to upcoming international standards, with upcoming international laws. At least I hope. So it has not been said whether this is kind of a payment instruction or whatever. It's not said yet. So that's a nice approach, I think, and we should follow that. And my last word relates again to the BIS Innovation Hub and the existing ones, and also the ones that are still created. This is an excellent way to gain experience also on the legal field. You will see what peculiarities, national peculiarities you have to address, and how to harmonize them from the start. So I think these are two ways how to create a better cross-border environment.
Okay, thank you very much. Well, the head of the BIS Innovation Hub is still here backstage, so I hope you heard it. Thank you very much, Corinne. Now I have one question to all of you, and I think you all actually already answered it in one of your comments, which is if tokenization is coming to global financial markets. Probably we already heard it, but if yes, when will we see this? Is it in 5 years, 10 years? What are we talking about? Maybe we start with you, Tim, in New York.
Sure. So, well, the good news is I can give a very positive and near-term answer to that, as I know Matthias can as well. So we will be going live for SDX. Well, actually, let me even take one step back. You know, tokenization is already here. You know, that isn't something that we need to wait for. I think we've seen a lot of clearly the crypto-focused momentum increases. And we just made a big announcement today alongside.
Congratulations, by the way.
Yes, thank you. We're very excited, as I know Matthias and our partners at Swisscom and Custodigit are as well, about getting into that space. So that is a space that is really coming of age. It's becoming institutional. There's a lot of institutional money looking to get into this new asset class. So that's one form of tokenization that's already up and running, and there are, you know, liquid markets globally 24/7. What we're trying to do is really push the boundaries of that to the next phase, which is regulated securities. We're really trying to get to that point where the largest financial institutions in the world have a level of comfort with the infrastructure that allows them to get into this space, and that means crossing over into a new territory, which is wholesale markets, equity issuance, debt issuance of different kinds, bonds and loans. And then perhaps a little bit further out, we're looking at non-bankable assets. We will look at fund structures, which is pretty traditional. There are funds that are tokenized or funds of tokenized assets. And then you kind of get into structured products and derivatives. And then you've got your art and your real estate, all this stuff that in theory it should have the opportunity to be traded and tradable, where it really hasn't in the past. And this huge swathe of private assets that exist and that's by far the largest asset class out there, that we want to tokenize over time. Now, timing-wise, that journey is, as I mentioned earlier, is a long one to get all of that done. But the good news is, starting next year, as soon as we go live, we're going to be doing those significant institutional issuances. We're going to be doing significantly sized bond issuances. We're talking 100 million Swiss francs or higher. the kind of issuances that make their way into the Swiss bond index. We're talking about tokenized loans. We're working with European banks on getting loans off of their balance sheet. They have pressures due to Basel IV and the balance sheet kind of challenges that they have in terms of having assets on balance sheet. They want to get them off, and this is a great way to do that. And the efficiency allows us to get that to a broader set of market participants. And so 2021 is going to see that real activity. Now, what it won't be will be global. It will be certainly localized in our Swiss Zurich location. And the next step is to go down that road, and there are some other exciting announcements you'll see this week on our journey there. So look out for that tomorrow. But and we won't have high frequency trading in 2021. It won't be like, you know, all of the banks on a marketplace, but we will have some of the largest Swiss financial institutions, Swiss corporate issuers, actually going to that end to end, and that real kind of entirely issuing, listing, trading, settlement, custody, buy side. That's what we'll see in 2021 on SDX. And look, there are other platforms doing really exciting things. Matthias and Signum Bank in particular are also doing exciting things. But you know, I think that the basic message, Tanya, to everybody listening is this train's leaving the station. This isn't a thing that is now sort of a figment of imagination. This infrastructure is built or being built. It's going live. We've got FINMA looking to really support this. We've got, as we've seen, the Swiss National Bank and the BIS getting behind this. And that's just Switzerland. You look at other jurisdictions like Singapore and others, this train's leaving the station. It's very exciting to get on it.
Thank you. Thank you very much, Tim. And now to you, Matthias in Singapore, your final comment in a minute.
Yeah. Okay, I can keep it short. First, I would like to join Tim, what he mentioned about Custodigi. Very excited that SIX joined as an investor and partner, and I think it will ultimately strengthen the overall platform to cover both asset tokens and cryptocurrencies, because cryptocurrency is always the baseline. That's where it started, and understanding cryptocurrencies and providing infrastructure around it just complements nicely where we're headed. And then obviously as an entrepreneur and representative of a young bank, I obviously am very positive about this development. I do feel we're at an inflection point. We tokenize as we speak. We will announce one tokenization in particular later this week. So that shows me we can hopefully act a little bit as a speedboat in that regard, very much out of Switzerland, because it is linked to regulatory frameworks, to the hub that we have here, and then look forward to scale it also in close alignment with other players such as SDX and beyond. So very excited about 2021 and beyond.
Sounds good. Thank you very much, Matthias. Anything to add, Corinne?
In 20 seconds, just I will just address one thing that I'm particularly interested myself. I think we will have a big movement in the area of central bank digital currency. We will see there I'll forecast within the next 2 years, we will see very interesting developments. It's just personal view.
Thank you very much, Corinne here in Zurich, Matthias in Singapore, and Tim in New York. With this, we end the SMB and BIS Innovation Hub session. Tokenization is coming to financial markets, and there is a lot of excitement about new business models and improvements. But there might also be a lot of work to make sure there's a smooth transition, both on the central banking and on the legal and regulatory side. So one takeaway is that there's a lot of collaboration, private and publicly, domestically and internationally, and we might be a few years away from big changes, but it seems that we're all on the right track. Thank you very much to our panelists. Thank you for watching. And before I close this session, join us on Wednesday for the next session on the same channel. Have a nice day and goodbye.